trading group, February 13th. We've got a little bit of a head scratcher of a day. New all-time highs on the SPY. I'm going to discuss with you why this is happening, okay? Because one of the main discussions in chat today with members, an ongoing discussion on social media with a lot of people is, why the hell is the market at all-time highs with what's going on with the coronavirus? So that is what has sparked this video. I'm going to discuss with you guys why I believe that the market's at all-time highs. Not saying that I necessarily agree with the market being at all-time highs right now, but I'm going to explain to you why I believe that it is. I tried actually getting short the market today on the gap down. So let me update you guys real quick what's going on with the coronavirus. Coronavirus fears subsided. Okay, let's do a quick little recap on what's going on with the coronavirus. In mid-January, late January, that's when fears of the coronavirus really started to take shape. And we really started to realize the spread and how easily that the virus spreads. The incubation period, you can be contagious even though you're not showing symptoms. And you had this pullback in late January, and it was a pretty healthy pullback. But just 3 days later, we take it all back and make new all-time highs. And since then, have made new all-time highs, 3, 4 different times. We've been putting in new all-time highs here. But today is kind of the interesting day because today, last night, we got reports out of China, more cases, a lot more deaths, and it actually shows that the spread is accelerating, not decelerating, which was kind of what got the market excited when we covered back the coronavirus fears. Now, let's talk about this for a second. China businesses, okay, were a lot of China businesses closed until February 10th. Those businesses, the majority of those businesses still remain closed. It's now February 13th. The virus is still spreading. Okay, just last night, there was another 14,000 cases, another 242 deaths that were reported from China. That's what caused the gap down this morning. The futures sold off late last night. Looked like we were going to have a down 250-point day on the Dow today when we woke up this morning looking at futures. But sure enough, that gap down got bought up. I don't really understand why the virus is showing that it's not really being contained yet and that it's still spreading in China, yet the markets are pushing to new all-time highs. You have a lot of conflicting reports coming out, guys. I'm just going to get right into why. I'm going to talk to you about my trades in the SPY today. I'll talk to you about my trades in the SPY today, but really the focus of this video is I want to do a global kind of macro video and explain to you what is going on and how that relates to and results in the market being at all-time highs. Because it's not just coronavirus. There's monetary policy involved here. There's the Fed. There's interest rates. There's the repo market. There's China stimulus. There's a lot of different factors that are going into why I believe the market is at all-time highs. I'm going to break that down. I'm going to explain it to you. It's important to kind of make sure that you understand why markets are doing what they're doing, rather than just saying, hey, look at my trades today. I want to give you guys some more insight and value. And since it was a big discussion in chat, I want to talk about it. So the coronavirus was thought to was going to hinder economic growth in China. Businesses are closing. People are not going to work. Nobody is traveling. Ports are closed. Okay, shipping things in and out of China, areas are closed. I mean, there's not all of them. I'm saying certain areas. So that is going to hinder and that's going to affect GDP growth, especially in China. Now, China is a major part of the global economy and global GDP growth. If China gets worse and the quarantine, okay, in certain areas and the kind of cautious steps to have businesses be closed, not accept certain imports and exports to kind of help prevent the spread of the virus, if that continues to go on longer than people originally expected, it's going to have a bigger and bigger impact on GDP growth in China. If China ends up reporting 0% GDP growth for the quarter, that's going to have an effect on global GDP. It will affect the United States. You will see a pullback. But the reason why we are still pushing up to all-time highs is multifaceted. There's a lot of reasons. And all of those reasons added together are really, you know, weighting a lot greater than the coronavirus spreading. And I feel that my personal opinion is that I feel that people are not factoring in enough of the unknown. There's not enough hedging that's going on in case the virus gets worse. I think the virus is not being factored into algos. I don't think algos are programmed to take coronavirus headlines serious enough. Um, because I thought we should have sold off a little bit more today, not make actually new all-time highs when you get a report out of China that it's spreading, and you're getting accelerated growth. Now, a lot of people will say, well, the mortality rate is very low, and that's why a lot of people aren't scared. Now, I understand that the mortality rate is much lower than that of SARS, another outbreak that we had many years ago that caused a stir in the economy and got people scared. The mortality rate is much lower, but you don't need a high mortality rate to affect GDP growth. If businesses remain closed, more businesses close. If more ports close, less exports are leaving the country, less imports are entering the country. If that continues, it's going to have a longer lasting effect on GDP, and that'll hurt global growth. All right. So I don't really think that the low mortality rate, I don't think that's got really much to do with it. I think it's more along the lines of this is still an isolated incident, really, in China. You're not seeing widespread, accelerated spreading in other countries. If you start to see rapid expansion and rapid acceleration and spread in other countries, then you will start to see people get a little bit more concerned. As long as it remains isolated in China, so far global markets are not as concerned. You only have 15 cases in the United States. The United States still says they have a very, very firm grip on everything. If you start to see the cases in the US start to jump to 50, 100, then you will start to see some more panic set in. But right now, people are very content with what's going on in the state of the virus. The other thing is here that China has come out and said that they will stimulate their economy with monetary policy and other things that the Chinese government will do to stimulate the economy, to counterbalance the slowdown in economic growth that's going to be caused by the coronavirus and businesses being closed. That's great. Wall Street loves that. That's what started the bounce back. Okay, on the daily chart, that's what started this bounce back was when China came out and said that they were going to be stimulating the economy. It eased all of the fears that GDP is going to be affected. As long as China stimulates their economy to offset a slowdown in GDP growth in China, global markets aren't concerned. Okay? Global markets aren't concerned. That's where a lot of this strength is coming from because they're saying if it's just going to be isolated in China, China can stimulate their economy, we'll be okay. If the virus spreads to other countries that are not as able or willing or have the means to stimulate their economy, that's when you will start to see cracks start to hit global markets. To add on top of the bullishness in the overall market, you still have a very dovish Fed. Fed Chairman Powell just gave 2 days worth of testimony on Capitol Hill, and his tone remained very dovish. He still says that they're going to do everything in their power. They're going to utilize all the tools that they have at their disposal to keep this expansion in the United States going. So that, again, insinuates that we're not going to really get any rate hikes anytime soon, and actually insinuates that if we need to, if the coronavirus gets worse and it starts to affect global GDP and GDP here in the United States, that the Fed may even be more willing to actually cut rates further rather than raise interest rates as we go into 2021, 2022. And that's a very dovish and bullish tone that the Fed is taking, and Wall Street is rewarding that and they're celebrating that. You also have everything that's going on with the Democratic primaries. Now, I'm going to discuss politics real quick. This is strictly Wall Street based. I'm not talking about anyone's political opinion, not mine, not yours. This is strictly how Wall Street takes it. I will never get political on this channel. That's not why you guys are listening to my channel. I'm sure none of you give a damn about what my political opinion is, and that it should be that way. So let's keep it that way. With regards to what's going on with the Democrat primary, I think that Wall Street wants another Trump presidency. Wall Street wants another Trump term. Trump's policies are good for Wall Street. They're good for big corporations. They're good for taxes. They're good for earnings growth. It's good for Wall Street. Okay. Wall Street wants another Trump presidency. They do not want a Bernie Sanders, Elizabeth Warren, any one of those presidencies. Now, the fact that you are seeing what's going on in the Democrat primaries, you had the Iowa caucus mix up. You had New Hampshire Joe Biden, who was the front runner 10 months ago when he announced that he was entering the race. He finished fourth or fifth in the Iowa caucus and New Hampshire. So he has been starting to fade. Meanwhile, Bernie Sanders and Pete Buttigieg, they're sort of surging in the polls. And I think Wall Street, and what I'm reading from different analyst reports and some different institutions, is that they're starting to lean more and more towards a Trump 2020 reelection. And Wall Street is happy about that. When you add all of these things together, good policies, good economic policies for the stock market. Obviously, Bernie Sanders, Elizabeth Warren with the socialist mentalities, those would be negative for the economy, and Wall Street would sell that off. Okay, and again, this is nothing to do with political opinion. This is just, I'm telling you how Wall Street would react if Bernie Sanders looked like he was going to win the presidency. The markets would pull in. Okay, the markets would be fearful of that happening. Okay, so I think the fact that it's looking more and more, Wall Street is starting to really bake in a Trump election. They're starting to really bake in a dovish Fed for the foreseeable future. And they're starting to really bake in China's stimulus in their economy to counteract any slowdown with the coronavirus. People are betting that China will get this virus contained and it will stop spreading. It will not become this global pandemic where you have widespread cases in 10 different countries around the world. People are betting that China will get things under control. We'll have favorable economic policies to continue GDP growth here in the United States, and you have a dovish Fed that is willing to do what it needs to keep the economic expansion in the United States going. That is why I believe that the market is at all-time highs, even though China last night came out with more numbers that show the spread is actually accelerating, not decelerating. Okay, I think it was like under 15,000. It was over 14,000 new cases and like 240 something new deaths. Okay, that's not a slowdown in the spread. That to me doesn't say, hey, we've got everything under control. That to me still says things are not contained yet. And it's February 13th. Remember, a lot of businesses said we're going to close until February 10th. Well, it's now February 13th. The majority of those businesses are still closed. Okay. I have a friend of mine who owns a small business that's waiting for equipment for his business that's supposed to come from China that he can't get because of the port is closed. Okay. So if a friend of mine with a small business is being affected by this, you can't tell me that global GDP won't be. So all the things that I just discussed with you, I think are counterbalancing or negating, the GDP effect that this will have on China, and then China willing to come in and stimulate their economy. So things will have to get really bad with the coronavirus spreading, I believe, to other countries for the markets to start to pull in, because other countries may not be as willing or have the means to stimulate their economy to counteract a slowdown in GDP growth. And that's when I think you'll start to really see markets crack again. You'll start to see markets be fearful, because then you don't really know what the economic impact is going to be. There's been a lot of reports. Goldman Sachs came out with a report a couple days ago saying the impact's going to be minimal. And that's all fine, and it may be minimal, and I hope it is minimal. But until the virus is actually contained and it stops spreading, how could you give a forecast on what the economic impact is going to be? What if it's April and we're still talking about the coronavirus? What if it's May? What's the economic impact going to be at that point? So I don't think there's enough of that unknown factor that's being um, considered when you're seeing the buying pressure that you're witnessing in the overall markets, and I think that's a mistake. I think that there should be a little bit more hedging going on. Gold, it really isn't going crazy. I'm not seeing a lot of, you know, absurd volume coming into volatility. I mean, volatility is very cheap right now. You can buy insurance on your long positions very cheap. You can, the VIX is super cheap right now. You can buy the VIX very cheap. I'm not seeing abnormal volume for people coming in to get insurance on their long positions, and I just feel like that's just a little weird. It's a little off. But I got a lot of questions from people today, like Mike. If there's negative headlines about coronavirus, why is the market at all-time highs? A lot of people ask me that on social media. A lot of people ask me that on chat. So that's what prompted this video. I wanted to explain to you what my thoughts are. I could be wrong. These are my thoughts. Okay. Taking everything into consideration, that's why I believe that we made all-time highs today in the SPY, and that's why I believe the market just keeps shrugging off a lot of these headlines regarding the coronavirus. As long as it stays within China and China says they're going to stimulate their economy, as long as we have a dovish Fed, I think that the markets will remain bullish. All right, so just got to keep eyes on what's going on with that. Okay. Then getting into the SPY, we'll talk about my trade here today, guys. I bought some put options in the SPY. We gapped down today, and what I was looking for was this area to be resistance. You guys can see we had a nice little support level here yesterday on the SPY. So on the gap down today on the negative news, we pushed up, and I said, okay, I'm going to look here to get some put options. I'm going to look to maybe to fade the market. Say I thought the SPY had a chance to get down and close this gap and get down to 335. So on this push off the bell, I went ahead and I bought some put options right in here. I'll take you guys to my trade announcements on the day. You can see I bought the 336 strike tomorrow expiration put options at 83 cents. Right away, we got a quick little pullback, and I knew I was, fighting, the stock. The market pushed higher off the bell, so I wanted to take some profit. So I did quickly there at 97 cents. So in at 83 cents, took some off at 97 cents. And then we got this sharp pullback, and I took the bulk of my position off the table in front of the. I'm sorry, guys. There was my first take profit. There's my second take profit at $1.23. As you can see, I took more profit off at $1.23, and I started to get pretty confident after I saw that crack in the market. And then on this little bounce back, I was looking to add back to my position to then get rejected up here and then eventually roll this back over down towards the lows of the day. So I actually right up in here, right there, guys, I added back to the put options. I bought more. You can see here at $1.05. And then once I realized that we were not rolling over, I exited the rest of that position at 94 and 93 cents. So I got a fill at 94 and 93 cents. So, not really much going on here. Kind of pretty much a non-event. I bought some at 83, sold some at 97, sold more at $1.23, bought more at $1.05, got out at 94. So, really just treading water here today. Nothing to write home about. A small P&L day, kind of a non-event as the markets ended up pushing higher to all-time highs. So, I came into the market today thinking bearish, and I was wrong. Markets made new all-time highs, and I hope this video helps you guys understand how global economics and macroeconomics work and how everything really truly is tied together. And that is why I believe, that's my opinion, why I believe the market's at all-time highs. Hope you guys like this video. Make sure to smash that like button for me. Comment below. Let me know what you think is the reason why the market's at all-time highs. And make sure to hit that notification bell so you don't miss any more of my videos. I'll see you guys in chat tomorrow for Valentine's Day. Later.